GDPstrategy.com.
Hi, this is Chris again, looking at the upcoming Tuesday, September 30th trading session. I have the economic calendar in front of you as per usual, and you can see that we do have some announcements coming out relatively early in the session. The one I'm paying the most attention to, of course, is German unemployment, anticipated to come in at negative 2,000 and 6.7% as far as the rate is concerned. I think this will have an effect on the euro and the DAX specifically, but could affect some other European indices just simply because the German part of the economy and the European Union is just so strong and such a large part of everything that happens. Looking forward, we have GDP numbers coming out of Great Britain, anticipated to quarter over quarter come out at positive 8 and year over year to come out at 3.2. With that, we feel that the market should probably be affected, probably in the FTSE and the British pound more than anything else. After that, we have the possibility of some motion in the Canadian dollar with GDP coming out month over month numbers, but consumer confidence is the number that we think will offer the most as far as effect in the marketplace later in North America, probably affecting U.S. stock markets more than anything else. Probably a minor effect, quite frankly. It looks like the stock markets are already setting up to go higher anyways, but this of course does have the ability to move things in the S&P, the NASDAQ, the Dow, etc. And looking at that S&P 500, you can see that we are forming a hammer for the day here on Monday, setting up for a positive Tuesday. So really, if we can break the highs of both Monday and Friday, we don't see any reason why this market won't go to 2000 first, then possibly 2020. Looking to buy calls, we think the S&P 500 will continue to be bullish overall, so certainly have no interest in buying puts. You can see that the euro is trying to rally a bit during the session. We believe this is simply going to be a put buying opportunity, and it's only a matter of time before the sellers get involved. We think that 130 needs to be broken to the upside in order to really think about buying calls. So every time we rally, we're looking for an excuse, quite frankly, to start buying puts again. Looking at the FTSE, you can see we're forming a hammer for the day, and that, of course, is pretty significant as far as support is concerned. That being the case, the market breaking 66.60 would send this to 67.20, at least in our opinion, giving us a call buying opportunity. No puts at all, as far as we can see. Really not interested at all. Gold continues to just sit around at the, say, 1215-ish area. Really not much going on. If we can break down below 1200, it is a put buying opportunity in the sense that we should drop all the way to 1000. Quite frankly, there's nothing on this chart right now that makes me confident of going long or buying calls in gold. So really at this point in time, this is a seller's market. Every time we rally, we'll be buying puts. You can see that the British pound did bounce a little bit off the 162 area, forming a little bit of a hammer. Probably going to go higher, maybe back to 164, so we are buyers of calls on a break above the range for the Monday session. And with that, we have taken a look at the Tuesday, September 30th trading session.